So some homes, and I'm going to show you this later in the video, are going to have higher sales to list price. So we've had a lot of requests lately to do more market reports. People want to know what's happening in the market. There's a lot of news out there, especially on YouTube, about a crash. And we've also had a lot more people asking us to do market reports every week. So what we're going to do is put out reports on different parts of the market. We'll do a Phoenix market report, then we'll do a condo market report, and then we'll do a Scottsdale market report. Now we can do a specific report for anybody watching the videos in the greater Phoenix area. They just have to reach out to us. So let's get into the information. There is a lot going on and there's a lot of changes happening in the market right now. Oh, and by the way, I don't know if you heard, but there's an election coming up and a lot of people are wondering if that's going to affect the market. Let's get into this information. So first, let's start out on the dashboard and let's take a look at the market in general. Now, just looking at these numbers for the average person, they would never know if this is good, bad, or where it's going. So right now, we're looking at active listings. We have 17,000. Now, let's compare that to a year ago. So you can see our active listings are up 57%. What happens when active listings go up 57% and supply goes up at the same time? In the last 30 days, you can see sold listings are down 11.85%. Listings under contract, that's how quickly we're going to absorb the inventory. Listing count right now, under contract, 7,779. A year ago, 8,000. So we are seeing a decline. Let's see in the last 30 days, down 4.46%. In this chart, you can see supply versus demand over the last 4 years. Supply and demand are what set the price on the homes. If supply goes up and demand goes up, then we have a balanced market. But if supply goes up and demand slows down, we have a drop in the market and people are forced to drop their price. So now let's take a look at the 30-year fixed mortgage. You can see here where, through September of 2023, it went way up. It was almost right at 8%. And right now we're currently sitting at right about 7%. Now we had a big jump this last month. You can see it went up quite a bit, and every little bit makes a big difference. The market really took off back here when we were under 7%. And that seems to be the new trigger for when people want to enter the market. Now, the one thing I wanted to tell you guys, who is buying and selling right now? Right now, most all of the sales are people that have to sell. They need to sell the home or they want to take advantage of the price right now, and they have to make a life change. A lot of the listings that I've dealt with lately, the people were, retiring or they were moving and they had to move for one reason or another. Other than that, people aren't buying as much for investment. They're definitely not buying for Airbnb, and they're not buying for long-term rental as much as they used to. So let's take a look here, and this is where the charts really show everything. In the blue right here, we have active listings, right? Now you can see the difference. The black line down here, the gray line, is sold listings, and you can see the spread that we're creating right here. These are new listings coming on. Now the one advantage we have is there's not a ton of new listings coming on the market right now, but there's a big difference between active listings and what's selling. That's a huge difference. The next thing that you have to look at is list price. So right here on the active median list price. Now remember, every time you look at market stats, there's a lot of fake numbers out there, numbers that don't make sense. And when the media puts them out, they want to show the average price. There's a big difference between the average price and the median price. The reason being is the average price, they take all prices together and divide it by the number of units. Median price is more realistic to the market because it takes all the listings and basically 50% are above a certain price and 50% are below. Median price is what we go by, price per square foot, when we're talking about it, but a lot of TV shows will show average price and affordability of the average price, which is substantially higher. So as you can see right here in this chart, absorption rate in months is going way up. You know, for a while their homes would go on the market and they would sell in 30 days when we had, rates under 4%. Now the other thing that's really misleading in the market is this right here, sold to list ratio. Now, on average, we're showing in the Phoenix market 96% of asking price. Well, that varies based on price of the home. So some homes, and I'm going to show you this later in the video, are going to have higher sales to list price. But the one thing that doesn't show up in the data is the fact that there's a lot of seller concessions. So stick around to the end of the video and I'm going to show you the percentage of concessions in the market right now. So this is information from the Cromford report. So as you can see, this is the monthly average sales price per square foot. And you can see we were up at around a couple months ago, we were up at $332 a square foot. We dropped as low as $313, and right now we're around $320. So next, let's look at days of inventory. And this chart is a 10-year chart, so you can really see the graphics of what's happened over the last 10 years with days of inventory, meaning, active inventory on the market. And right now you can see that we've been steadily going up. Right here, as of July, we had active count of 1,898, annual sales count of just under 10,000. But the graphic really shows what's happening, and all you have to know is days of inventory went down when interest rates went down, and days of inventory go back up. Once people get a little bit used to the new interest rates, they jump back in the market, then they get back out, and now we have more inventory back on the market. And right now in Phoenix, 54% of all listings on average are having seller concessions. Now, what are seller concessions for? Well, we did it in lieu of repairs. So we had two older properties. The people wanted to get things fixed. My clients didn't want to do the work. So they gave them $15,000 to use however they wanted. Most of the people right now will use the money to buy down their mortgage rate. It's called a 2-1 buy down, and they will apply as much as the lender will allow them. The problem is there is a limit on how much can be credited. Now some people, if they're paying cash, they just took that money and used it toward closing costs and then applied it to a price reduction in the end. But ultimately that showed a different sales price in the MLS than what they actually netted at the closing table. So I did an analysis because every price range is a little bit different. So I took homes here in Phoenix between 500,000 and $1 million. So there was 200 sales in the last 30 days. Let's look at the averages. The average list price was 517,000. The average sold price was 504, and it shows that it sold for 98% of asking price. Now remember, asking prices can come down. So that is as of the latest price reduction, not the original listing price. So they're showing 98%, but again, in real terms, a lot of people right now, 54% of the transactions are helping buy down the loan, and the average amount right now is just under 10,000. So really that would drop that percentage down by a point or two. Average square footage was 2,012. List price was $269 a foot. Sold price was $262 a foot, and the average days on market was 55. Now let's go look at the same chart for homes over $1 million. There was 85 sales in the last 30 days over $1 million. The average sales price was $1.9 million. That's list price. The sold price was $1.827 for 96% of asking price. Now on the higher priced homes, and let's just say a luxury home is over $1 million, it's not anymore, but it's just it's not even a mansion anymore. Anyway, the more expensive homes do not give as many concessions. They'd rather do a price reduction because most of the people are putting more money down, and therefore you can see the sale to list price ended up being closer to 96%. The average list price per square foot was $506. The average sold price per square foot was 487 and it took 74 days to sell. And that still doesn't come into the fact that they may have already done a price reduction. Don't forget to take a look at our website here, soldbysmitty.com. You can go in here and get a quick home value right here by entering your address. It'll go through and give you an approximate price for your neighborhood. We can do a detailed CMA for you, a market analysis, and then you can also get a free download of our books we've published on Amazon on your home buying, home selling, flipping, and long-term rental. There's a lot of good information we put out on this website, and I write a blog every single week. You can read some of our articles. We try to keep you up with some of the things that are happening in the Phoenix market. So overall, we're not seeing a crash right now, but we are seeing price reductions. There's so many different major cities in the greater Phoenix area, and every single one is affected differently. We can do one on your neighborhood and or your area. Right now, the #1 market in the valley is the Chandler market, and I think with the semiconductor industry coming to town, that's going to even go up higher. Scottsdale's holding its own, but take a look at our other videos we're going to put out, because we'll do one on the condo market and the Scottsdale market. Thanks for tuning in today. Have a great day.